Does the free market corrode moral character? According to John C. Bogle's point of view, it all depends. It depends on what kind of market we are talking about. It also depends on what we mean by moral character. A free market can be described as being a laissez-faire market, meaning an economy with unobstructed competition. The transactions between buyers and sellers are private. To put in plain terms, the free market is any voluntary economic activity that is not controlled by coercive central authorities. Does this sound like the market we have today? In my opinion, no, it does not, and John C. Bogle doesn't think so either. Our free market today is better described as a fettered market. Fettered in this case describes our markets as being restricted in an unfair or undesirable fashion. Our corporate and financial regimes do not have perfect structure, perfect competition, and perfect information as they should in a perfect free market. This is why it all depends on what kind of market we are talking about. Bogle believes that the current financial crisis has less to do with the fundamental character of markets or of people than with relatively recent structural changes in the character of our financial and capital institutions. He goes on to say that about a half century ago, our society was described as an ownership society. In this society, corporate shares were owned primarily by individual investors. By pursuing their own self-interest, individual investors advanced the interests of society and exhibited positive character traits. These traits were prudence, initiative, and self-reliance. In recent years, our society has become an agency society. In an agency society, corporate managers control the publicly held businesses without holding significant ownership stakes. Financial intermediaries that now hold voting control of corporate America are agents for the majority of individual investors. In the early 1950s, individuals held 92% of all U.S. stocks, and institutions held just 8%. Today, individuals hold only 25% directly, while institutions, largely mutual funds and pension funds, hold 75%. Corporations, pension plans, and mutual fund managers have put their own interests ahead of the interests of the individuals who own the mutual funds and are beneficiaries of the pension plans. As Adam Smith once said, managers of other people's money rarely watch over it with the same anxious vigilance with which they watch over their own. They very easily give themselves a dispensation. Negligence and profusion must always prevail. There has been another problem with the free market system in the latter part of the 20th century. Before, long-term investing was the knowledgeable strategy to pursue, yet individuals began to invest short-term. Bogle points out when long-term owners of stocks become short-term renters of stocks, and when the momentary price of the stock takes precedence over the intrinsic value of the corporation itself, concern about corporate governance is the first casualty. The corporate director's main priority is to assure that value is being created for the shareholders. Today, this priority is secondary for the new agents and investors. As for moral character, Bogle believes that an individual either has it or they don't. But moral character is an absolute, according to Bogle. So if moral character in our society today is eroding, as I believe it is, it can only follow that fewer of our number display solid character and more of our number do not. The change from a free to a fettered market has played a role in the erosion of moral character in society. The values of the corporate leaders as well as the financial leaders have weakened, which directly affects many in society. Our society has changed from moral absolutism, meaning there are things that a person should not do, to a society of moral relativism, which means if everyone else is doing it, I can do it too. Due to the change from moral absolutism to moral relativism, the free market has deviated from the norm. There have been attempts to administer prices of the goods and services companies sell. Executive compensation has risen immensely, and lobbyists are paid an insane amount of money to pass laws in favor of the rich and powerful. The burden of the financial crisis we are currently in is falling on the many who were lured into it, such as investors in overrated mortgage-backed bonds and borrowers whose homes are being foreclosed, not the irresponsible ones who created it. Fettered capitalism has indeed corroded our moral character by both privatizing the rewards of the market and, in the form of federal bailouts, socializing its risks. Both are betrayals of the free market and its genuine virtues. John C. Bogle.